Hey, this is Garrett Stuckey here with another episode of the Startup 360 podcast, where viewers can watch the interview on a VR headset and get the full immersive experience. This podcast is all about startups at various stages and helping both you and these founders in every way that we can. Please subscribe to the channel, please share it with your friends, please like the videos. You can also get a hold of me either at garrett@startup360podcast.com or 734-274-9521. And today I've got Catalina here of LoanSense, and I want to thank you for coming on here today. It's really awesome.
Thanks.
And so let's dive right in. What is LoanSense and where did it come from? What's the idea?
So LoanSense essentially is an employee engagement FinHealth product that helps their employees understand what repayment plan they should be on and strategize how to pay back their loans as quickly as possible. What makes us different than what exists already in the marketplace is that we help employers understand how they can leverage federal funds to reduce their employees' debt burden. So we've been able to help employees reduce their debt burden by $20,000 to $30,000 because a lot of Americans qualify for income-based plans and interest subsidies that they have no idea. Only 20% of people that qualify are actually applying.
Oh, wow.
So for those who have student loans, I highly encourage you to look into it because basically with your debt-to-income ratio, you could potentially qualify for interest subsidies. So how it works as a retention tool is that, let's say the average retention time at an employer is 13 to 15 months.
Okay.
Well, the employer could say at month 18 or month 20, we'll give you fill in the blank, $2,000, $3,000 towards your loans so they can get an employee to stay for longer, and it actually saves them money because the average turnover cost at an employer could be approximately $50,000 to recruit an undergraduate, depending on their degree as well as their educational level. And it takes 3 to 6 months to get them working and helping the business earn their revenue per employee up to what it should be. So essentially, it's better to keep an employee who's already trained than it is to go out and rehire someone. So it's a retention tool, but it also helps the employee and reduces their financial stress. And student loans is the number one financial stress of millennials and Gen X, and it's also the number one reason people withdraw early from their retirement. So it's a huge drain on kind of the thought capital of an employee day to day. So that is what LoanSense hopes to do, is help employers understand how helping with student loans can essentially make a more productive workforce, can help their employees, and as a result retain them. And it's better for the bottom line, and it's better for their culture.
Wonderful. So, a few things. First, you mentioned the term FinHealth. That's financial health. I just want to make sure the audience is on the same page.
It's like it's financial health. So it's an innovative financial health product that deals specifically with student loans. Yes.
Beautiful. And obviously, the whole student loan issue is very much the forefront today. What are some things that you're seeing being in the industry? I would imagine you have cool / very not cool statistics and things like that.
Yeah.
That how are student loans really affecting recent graduates?
So actually, I would love to answer your question in the form of a story. So people think that debt only affects recent grads. Well, first of all, the average payoff is at about 20 years. So if you graduate at 22, you're paying until 42. But then there's now a phenomenon that those that, once you pay off your loans, you have children that then go to college, you're also born for them. So potentially them and also your grandchildren, like children and grandchildren. So the highest actual percentage of growth in student loan rates are those above the age of 50. So basically in the last 3 years, 3 plus, I don't remember if it's 3 to 5, but the time range is basically over the last decade, the number of borrowers is not the highest in those 50 plus, but the rate of borrowing per each borrower, and there's about 15 million above the age of 50, has increased at 2 to 3-fold, depending on the time range. And so that means that the rate of borrowing per person is increasing significantly. So the story I'm gonna tell is one of a really good friend of mine. She went to art school and she borrowed a significant amount of debt, but her mother also took on debt. And students qualify for more benefits from the government on income-based plans than parents. Parents do qualify as well, but they have to consolidate and they have to pay a higher percentage of their income towards the loan. So my friend's mother, was in her late 40s, and she's on a repayment plan that has her paying until her late 60s. So not only does that delay her own retirement, but that also affects my friend's ability to think about home ownership, and the things that most people our age would think about doing has been delayed. So the statistics are, obviously, we know it's a problem. 75% of our workforce that's graduating today have student loan debt, and it's increasing at the rate of about 100 billion annually. And it's not just a problem of the 20 and 30-year-old. It's now becoming increasingly the problem of the 40, 50, and 60-year-old. So creating something that helps address those issues, and understanding how to help someone lower their debt burden because they qualify for government subsidy programs and income-based plans. Even if they decide, I don't want to enroll, they still should know about it,
Yep.
And so I think that's our mission and our vision, right? Is it's not just a great retention tool and it helps people, but it's also how do we leverage benefits and programs that already are in existence to address this problem? The government just doesn't make it. It's very complicated.
Yes.
So the benefit of our software is we simplify the process significantly. So we pull loan information, we help people get on the right repayment plan, and then we help them file their paperwork. Simple, 1, 2, 3. They can enroll their family members in it. So we also have a borrowing advisor. So if your children are going to go to school, we have a borrowing advisor so you understand what you're taking out, what does that mean for your future. So those are kind of the key things. I don't know if I answered your question on stats and kind of
You did.
the industry.
And I think what at least surprised me, so as somebody that, my wife and I, at our peak, were paying over $1,000 a month in student loans, and the problem I thought has always, it's become so big that the fact that it's now affecting my parents' generation and grandparents, like that surprised me, and that's a huge problem because where do you go after that?
Right.
And that's a really, I don't know how to answer that question.
Right.
So with my LoanSense, then when an employer brings that to their employees, there's the financial advice, filling out the paperwork, maybe helping them get their loans lowered, things like that. There's also the paying for student loans, and you mentioned federal dollars. How does that work? Like, is that money that the federal government pays back the employer then?
No, so how that works is essentially, and this is why filing the paperwork is important because you're required to file it annually. So what essentially happens is the government, there are forms online that essentially you enroll in an income-based plan, and based on your plan, the government gives interest subsidies. So there's a couple plans where the government pays 50% of the interest in the first 3 years, and 100% of subsidized loan interest from year 3 to year 20 or year 25, depending on if it's undergrad or grad school. So what happens essentially is, just to keep it simple, is it's filing and putting yourself into that plan, and making decisions around if your specific loan you took on is not a direct loan, then you're required to consolidate the loans and then apply into the plan. Also, if you work in nonprofit or public sector, like for the government, you qualify for loan forgiveness at the 10-year mark. So that also requires annual paperwork filing and being on time, because if you get kicked out of the plan, then your interest that accrued that you were supposed to get subsidy on, you won't get if you get kicked out of the plan, which means you have to file annually. So it's kind of a big to-do, and we want to make it less of a to-do, like a TurboTax, if you will, for student loans.
Okay.
Because it shouldn't be something that's like stressful. And what we found from the people we've been helping that we know our statistics in terms of helping people lower their debt by 20 to over 30,000, depending if they're private or public sector employees. We found that, the individuals, we found that there's a lot of distrust in what servicers are telling them, because the majority of loans are federal loans, because they're like, oh, every time I call my servicer, they're telling me a different thing. So servicers will just put people on forbearance or deferment when they actually qualify to have their loan taken down to like $30 or $40 from $300 to $400. They qualify for it, but their servicer just puts them on deferment or on forbearance when they could just qualify to get their whole loan reduced. So there's a lot of information they're not getting access to. So we create an algorithm, a platform, like a repayment optimization engine, where they answer a few questions, we pull their loan data, and we can tell them which plan they should go on and how to advocate for themselves, because at the end of the day, they still have to connect with their servicer. So what is a script we can give them? Basically, if you go to a servicer with no idea, they take the path of least resistance, you know? Whereas if we're like, give them a script on how to interact with their servicer as well as help them file the paperwork, it makes it much less friction in the process if they already had guidance on what they should be doing, versus if they just called and knew nothing.
Yeah, absolutely.
I don't know if that answered your question.
Yeah, no, that's because I was wondering why they're just being put on forbearance and deferment, and that's just because it's easier for them the servicer, for them to put somebody on that than to like walk them through this income-based repayment plan, for example, right?
Right, or sometimes, like, okay, so the servicer, how they make money is they make $2.58 every month you stay with them, or every month they have to service your loan. Why would they tell you about a plan that cuts their job time in half, which is 10 years instead of 20? That literally, they lose $2.58 every month for 120 months. So it's good for their business model to have you pay as long as possible.
Yep.
And if you default, there's debt collectors that now make 1% of your entire loan balance to go collect the money from you. So instead of actually doing the right thing and putting you on an income-based plan, which actually takes time because they have to sit with you, get you to answer these questions and to guide you, it's like they basically, if you say, I can't afford to pay right now, they're like, oh, can you afford to pay in 3 months? And someone may say yes. It's like, okay, we'll let you not pay for 3 months. Whereas it's like, well, actually, why can't you afford to pay? I can't afford to pay because I have a drop in income. Okay, that qualifies you for an income-based plan.
Yeah.
And I'm not trying to call all servicers evil, but this has been kind of the biggest theme we've heard over and over and over. Like every time I call, they give me different information. Every time I call, so there's no idea on who to trust. Like who out of these 5 people I talk to trust. How do I know my paperwork's getting processed? I sent them a form, I have no idea, they didn't confirm. Like it's just a lot of back and forth, and so if we want to make this process as seamless as possible.
Gotcha.
You know, and help them understand how to advocate for themselves.
So are you giving them the forms to file right now, or how is that?
So right now, we've been working, because we're in the launch phase, we're finishing our software. So we've been doing one-on-one interactions with everybody we've worked with so far. So we just sit with them. This is the form, fill it out. What don't you understand? We're here to explain. But in terms of how our software is going to work, is because we're going to have the majority of the questions answered already, is we're just going to auto-fill their form for them based on the recommendation that is optimal and they consent. So very similar to like a tax software, we don't we don't claim responsibility. Like, for example, if you enroll in the plan and it's not something that ultimately, we don't claim responsibility. Like, we're not going to take over your, like, there's some companies that are predatory out there that will charge you $500, but then you kind of give them a power of attorney over your loans. We're not taking that approach. We're taking an approach of a software, of a like tax software, where you're still responsible for what you file. At the end of the day, you're still responsible for the information you put in. We just help make it easier because you've given us information and we fill it into the appropriate boxes, and just make it easier than expect you to read 10 pages of legalese from the government, which is the current form. It's like, imagine doing your taxes without software.
Yeah.
Right? And you have to like go read every little appendix on your own to fill it out, you know? So we just kind of make that process more seamless for someone that needs to file it, as well as front load directly the recommendation. Yeah, on what payment plan they should go on. So they're not guessing like, which one do I go on?
Awesome.
Yeah.
So you're giving me a lot of personal research here. We may have to talk after this.
Yeah. I'm happy to help people understand. I'm happy to help people understand it. It's just so critical to go out and research. For example, like in the marketplace right now, if you Google student loans, you have so many companies with, like, SoFi, for example, has $1 billion budget, right? They'll market refinance. Well, the reality is the majority of Americans don't qualify for refinance at good rates, right?
Yep.
So pushing, like, I'm just saying to any viewer out there that's watching this, to watch out, because when you refinance the private sector, you lose. If you become permanently disabled, by the federal government standards, you can file paperwork to get your loans purged. Mm-hmm. Sometimes private loans don't, depending on the contract, they get passed on. If your parent co-signs, something could happen to you, now your parent's stuck with your loans. There's a lot of benefits you lose from going off of federal loans that people aren't fully aware of. So if you have a drop in income, you lose your ability to go on income-based repayment. There's a lot of different, if you don't have steady and high income, I actually would not make refinance the choice that comes to mind for the majority of people, actually.
Okay.
And it's kind of what the marketplace pushes right now, like, push people to private, but it's like, no, you lose a lot of great benefits the government has there for you. It's just people don't know about them.
Yeah.
Yeah.
So let's kind of talk about how you. So obviously we're giving advice, financial advice, which is a pretty regulated industry. How are you, I guess, navigating all of these regulations? How are you, I mean, you're not a financial advisement firm,
right?
CFPs, things like that.
So we're not giving financial advice. Telling someone what they qualify for, like in terms of federal loans, is not like, I'm not telling people like, oh, this is how you should manage your money. Mm-hmm. I'm just telling them based on a few questions if they qualify for federal benefits and what are a few options they can consider. Mm-hmm. But the disclaimer is our terms of use is that if whatever action you follow through is your action. So like if you need to go confirm that with a tax professional or your own financial planner, that's great. Uh-huh. So we don't take on the burden we're not giving anybody financial advice.
Gotcha.
We're just telling them based on the information you gave us, these are federal plans you may qualify for, or these are federal plans you don't qualify for this.
Yep.
So we have simple tools like Accelerate Calculator. They're not calculators actually, they're all graphics based, where you can toggle like how much extra you want to make, and on a graph it tells you how much time you save. Like we have very cool tools like that. But at the end of the day, the decision you want to make on your loan, whether to put more, to put less, to go on an income-based plan, to consider consolidation, refinance, whatever, that is not something we own. So we're not giving any financial advice. We're just giving access to tools and access to filing simplification, to help them make it easier. If they choose not to use us because they want to go with advice from somebody else, that's fine. But our experience interacting with financial advisors are most are trained on wealth management or how to help you budget and all the various aspects of wealth management, but most financial advisors are not trained on what income-based plan you qualify for and what tax repercussions you may have as a result of getting on a specific plan, right?
Yep.
So it's actually a huge void in the marketplace, and we've actually spoken to a few financial advisors and hope to, once we launch, make our search engine optimization for repayment available to financial advisors to help them understand how they can help their customer manage their student loan, their client, or so to say, manage their student loan debt. And they could decide to take that or not is once again up to them. So
Yep.
just a little caveat on, we're not becoming financial advisors. We are getting financial advisor input,
Yep.
though, into what are potential benefits of being able to reduce your debt burden, save for retirement as well.
Yes.
Like, because if you are putting 20% of your income towards your loan, and now you only have to put less than 10, and they want to advise save the rest for retirement, you know, those are things they can advise. It's
Yep.
not, we're not touching like anything outside of just getting people information on the right plans and potentially like that they can save, but we're not giving any financial
Okay.
advice for like holistic planning or anything like that.
Gotcha.
Yeah.
Now, along those lines, are you planning on also selling to financial advisors? Is that part of?
Yeah, our secondary revenue plan is definitely, and I'm actually going to a conference in Kohler this coming week in Wisconsin to talk to 401k advisors, because we are setting up, we're essentially going to be able to allow 401k advisors to understand, to basically help their clients understand what they can do with their loans, you know, and we're hoping that 401k advisors could use our tool to help their clients understand what they can do with their loans. And so that's not our immediate goal right now to go to financial advisors. Our first goal is to launch as an employee benefit and help employers understand how they can use it for retention. And once we start to get those metrics and finish fully automating our software, then we're going to consider approaching financial advisors. Yeah.
Okay, great.
Yeah.
Are you, so we've got approaching employers, we've got hopefully approaching financial advisors. Are there any other markets or ways that you're targeting users and additional revenue?
So we are strictly, our strategy right now is going business to be a business to business software. We don't plan at this moment in time of being a business to consumer product, just because we've done a lot of research. The customer acquisition costs are higher. Although we can deliver value to a consumer, it's hard to go out there and compete against all the refinance companies that have really put a lot of money into all the search terms for student loans. We're not hoping to, as of right now. Maybe down the line when we have a lot more capital, we could think about that later. But for right now, we're just focusing on business to business, especially if there's a tax law, if there's a legislative change that makes it so that 401k, student loan repayment assistance through employers become tax exempt, like a 401k.
Okay.
That's where we can really have an opportunity to help employers administer a student loan benefit to be like a 401k. They could decide, do I want to put my money towards a 401k match, or do I want to put my money towards student loan repayment assistance? So we're hoping to be in the marketplace to address some of those employer needs. We would love it for one day, 10 years down the line, where all employers have this as a viable option, you know? And so that's what we're focusing on. We're focusing on serving an employer audience. We're focused on serving a 401k advisor down the line, and maybe potentially lead generation revenue through our platform, like recommending other financial products. But we're not thinking about business to consumer at this time.
Gotcha.
So those are our key revenue sources.
Yeah, because I'm thinking about, I guess, for somebody like myself, so I'm self-employed, right? How do I get access to this? And I would imagine you're working with individuals currently, right? And you mentioned, hey, they've cut off 20 to 30 grand off their loans, which is a lot of money, which sounds awesome. So I would imagine at some point, if you're, as you're working with employers and saying like, hey, like we got this really cool program at work, like, do I have to go work there? Like, what's
how
your
do they
answer
get
to that?
access?
Yeah.
We can think, like, for example, someone even asked me, okay, what if an employee leaves that employer and they still want access to your service? So we can allow on offboarding for them to enroll in auto, like pay for renewal on their own. So we can allow individuals to do that. So it's not that we can't allow individuals or we can't serve individuals, period. It's just that we're not going to focus on our business acquisition model of going to acquire individual people.
Yeah.
But yeah, as of right now, we've had individuals pay for our service. So it's like we can do it. It's just not our primary go-to-market strategy, as well as, we can do it. Especially if an employee offboards, we're not going to say, oh no, we don't want your money, like goodbye kind of thing. We can allow them to continue to use the service. Or if they have their children using the borrowing advisor, then they want to enroll in the repayment, we're not going to say, no, we don't want your money.
Okay. So you're setting up the system to allow individuals to come to you, but that's not who you're going after.
It's not like our launch. We're just
happy to have you here.
Right. It's not our launch model. We're not like going after our website. Our new website, as we launch, we're not going in and saying sign up. You know what I mean? Like to individuals, we're gonna have links on like refer your employer. So it's kind of like an incentive to get them to refer us to their employer, so we can just help not just them but many people. And if individuals come to us, like sure we can help. It's just like I mentioned, not our primary. We're not going to create our whole business model around going to direct to consumer right now.
Gotcha. Cool.
Yeah. Although I'd be happy to discuss the loans.
Awesome. We'll do that one off camera. So, oh shoot, I just lost it. With the, oh man, I totally just blanked.
No, it's all right.
So, you're in the launch phase currently,
Mm-hmm.
and you're building out this software. What are some of your goals, like in the near term, like in the next, 6 months, year? Where are we really at, and what are we looking at doing?
So I have very ambitious goals, and not in the next 6 months, but my long-term, my goal that I'd like to accomplish over the next 5 years is to help 1 million borrowers save $30,000 on average off their student loans. And for me, that's significant because as someone who worked in the higher education, finance, and college access space before I came back to get my MBA at University of Michigan, which I just graduated from, this space has just always been near and dear to me. And part of why I launched this company is because I want to achieve something grand beyond a program in 3 counties in my home state, my hometown and home state, So for me, my goals are quite ambitious. And of course, I've kind of laddered out how I'm going to get there. But over the next 6 months, I want to acquire, I want to have relationships with early access customers where we can build case studies in different industries that have college-educated workforce that earns, I would say, between 40 to 80,000, or not 40 to 80, but basically under 80,000, right?
Yeah.
You can have above as well. It depends on your debt to income ratio, or our public sector employers, like if you're nonprofit, hospital system, all those employees qualify for income-based repayment because they qualify for public loan forgiveness. So essentially, college-educated workforce, or public sector employer, or like for example you're a bank and you may have employees you pay like up to the $50,000 range, but they're all college educated, so they probably all qualify for income-based repayment. I would love to build relationships with employers in specific industries to be our early access customers and deliver workshops and individual counseling and check back in to be able to build a case study on how we can help you retain and engage your workforce. That's really what I want to do over the next 6 months, to have solid early access customers and case studies.
Yep.
And then after that, obviously finish our software. We have a goal of finishing our software in that time as well. And then to take our case studies of the more face-to-face model and figure out how to automate the process we do in the case study, and to use our early access customers that we'll give a discount to leverage helping more people so we can get to my 1 million number of borrowers or employees we help with their student loans. So, and of course, and there's one other thing, right? There's always for me, my goals always stand in commercialization, so customers, product, because we want the best in class product, so we always have to iterate that. And then, of course, being an early stage company, fundraising. So I always have a goal in each leg of the stool, so to speak. And so within 6 months after we acquire customers, to go after some seed funding is our goal. So, yeah.
So speaking of funding, what do you know what amount of funding you'll be looking for, or is that kind of?
Yeah. So we're looking for over the next, after we get our initial customers, we're just looking to raise a pre-seed, or maybe by then seed, just depending on how much traction we get, of around $500,000 dollars. We obviously are operating very lean. I have an incredible team of dedicated individuals, and being on your podcast, I love inviting anybody that feels uninspired by their work, who is talented in either development, design, you have sales skills, and you want to help be part of the vision we hope to achieve. I invite you to help us out, and to build your portfolio. And we've gotten a lot of amazing talent that has helped us that way. We help you, you help us, as well as obviously have some dedicated people our company's been able to pay because of some funds I've raised while I was in school. But yeah, we just want to get some customers, prove our concept, and then raise, because that means we don't have to give away as much equity.
Yep.
So we've been able to operate pretty lean, and we just want to prove our concept and prove our value and then fundraise. So that's our goal. So around $500,000 after we acquire our initial customers.
Nice.
Yeah.
And what are your plans for that funding?
80% is going to go towards the product.
Okay.
Development and iteration. And of course, I shouldn't say 80, it's a little lower than that, because we need obviously some to go towards marketing and sales.
Yep.
I plan on being our first salesperson though, obviously, as the CEO of the company. So those are, it just has to go towards product, right? Because we can have a great value proposition, but if our product can't deliver that value proposition, then we're living in a dream world. So we need to get our product. We've already launched the Barn Advisor. We have that software complete. We're currently building up our back end. We're testing all of our design work on our front end right now, and we should be finalizing our product soon. So I'm pushing our team hard. So
wonderful.
Yeah.
So I'm gonna do a quick time check here.
Yeah, no worries.
So yep, that's what I thought. So before we get into the rapid fire section and talk about how the audience can help you, how we get a hold of you, is there anything else that we didn't touch on that you want to share and make sure that's out in the world?
I know your rapid fire questions will ask a few things, but I just want to share that I think it's really important as a founder of a company to just share, no matter what age anybody is at, to just, for me, being really passionate about what you do and figuring out a way to deliver value to society and yourself is just for me like what makes me want to jump out of bed every morning. And so if there's something in the back of your mind that you feel like, oh, I haven't lived, and you keep on pushing it off because you're trying to find the perfect moment, I challenge you to like start today or maybe tomorrow. But to start some small action to get yourself towards living your more truer purpose and passion is just something I love to share, because I feel that every day working on LoanSense. So I just want to share that. And if I can help anybody understand what that means for them, like reach out, and I'm sure you'll be sharing my contact. So I think that's so important to living with purpose. So
I love that.
Yeah.
I'm glad that you shared that.
Yeah.
You kind of jumped the
Yeah,
the head a little bit, but I'll allow it. So so with that, let's hit the rapid fire questions here. So, what is your best habit?
Ooh, so my best habit, habit and task, or habit versus skill, right? The difference. I know it's rapid fire though. My best habit is, if you get me your contact information and I say I'm gonna follow up, I will follow up. Maybe not immediately, but eventually. I'm very good about taking people's contact information and following up, if I say so. So for me, like being rigorous about doing what I say is just really important. So I think I'm good at that.
Awesome. And how do you manage that? Just really quickly.
Well, every time I meet someone and get their business card, one of the first things I do is LinkedIn people, because on the LinkedIn, if people don't know this trick, is you can see your most recent contacts. So if I LinkedIn people right away, even if I lose their card, I have their LinkedIn information right there. So if I don't have their email, I can message them on LinkedIn, which some people don't check, so it doesn't always work. But and then I log it into, we just have like a place where we log our contacts. So I make sure I'm like logging contacts based on like, where did I meet them? Who are they? Are they a stakeholder, potential funder, just user, whatever? Like we just tag people and try to be rigorous about that so we don't lose connection with individuals. So that's one thing I'm good at. I don't know if that's a good habit or not, but
I think that's a great habit.
Yeah. So I try to do that just so we can stay organized as we grow, and we don't want to forget the people that have supported us before I even started a company, like day one in grad school. And there's some shout outs, people know who they are, that have been supporting me before this. So I would never want to forget about them. Yeah.
Awesome. Cool. So the flip side of this question is, what are you bad at? And how are you working on it?
What am I bad at? I'm really bad at, I guess as an entrepreneur, I keep on hearing, you need work-life balance. I'm actually really bad at disconnecting from my work. And I know it's necessary, but I have a team member like in San Francisco. We'll speak from like 9, 10, 11 at night. Like our developer stand-up is like 8:30 at night. So I'm pretty bad at disconnecting from work. I'll give myself a huge to-do list on the weekend. I think that's pretty bad, and I would say that's bad because I do think it's important to disconnect. So how am I dealing with it? Well, the evenings I don't have calls, and the weekend time I also allow myself to, do normal people things like get addicted to a Netflix series and go dance. I love to dance. So dealing with it by like appreciating and valuing those moments of off time, because I know I push myself really, really hard. So it's a bad habit, It's good to like cap your work times, but I guess that comes with liking your work. So
it's definitely a tough balance there. So you kind of talked about this, but what is your advice to a high school graduate, a college graduate, and then a 50-year-old?
High school graduate. Understand your financial aid package to college. My best friend and I thought we got the same financial aid package when we went to college. And a lot of schools turn grants to loans as you progress. So asking a very key question, is this the level of financial aid I can expect through all 4 years, not just year 1? Get that answer very clear, and then ask what their career outcomes are. Because you don't want to go to an expensive school that has terrible career outcomes. Not that college education is all about career outcomes, but career outcomes are important to preparing the next generation, I would say, for the workforce. So asking what career outcomes are, asking what graduation rates are, and being sure you understand your financial aid package and that they're not going to start changing the grants to loans, and exactly how much loans would you graduate with based on average. So just find that out. That's my high school, that's coming from the perspective of someone who managed college access programming.
Yep.
And also understand in August what their bill's going to be. Because a lot of people didn't understand it and didn't have the money. So be clear what your bill will be. So those are some advice for high school. For college students, find out do things while you're in college to explore what you're passionate about. Because it's not having good grades and it's not having a degree that sets you apart. It's having a clear passion and a clear purpose that sets you apart. Because when you exit college, people can tell if you are sold by what it is you're applying to do versus if you're not. So try to understand that story. If it's going out and doing a side project because you're passionate about urban farming, I don't know, I'm just making this up. Doing a side project, doing whatever it is to explore what those passions are, that's such a good time in college to do that.
Yep.
And for a 50-year-old, oh my gosh, I've had so many 50-year-olds that I used to work with that were like, oh my gosh, I worked all my career and didn't realize I wasn't passionate about what I did. I just did it to earn money. So if you're 50 and haven't found your passion, it's not too late. Volunteer. Email me if you want to help me out, if any of that sparks your passion. Love to have you. So yeah, I don't think it's late for anybody, no matter what age you're at. Also for the college student, understand what you're graduating with and if your career outcomes can actually help you pay for the amount of debt you're getting into. That's huge. And for parents and grandparents, try not to co-sign your children's loans. Try not to do that, if at all possible. Because you could be stuck with it until your 70s, and they could be pulling from your Social Security check to pay those loans. So just be careful what you're signing up for, as much as you want to help support your children. Are there lower cost college options? Is that a possibility? Does your child need to take a gap year to understand what it is they want to do, rather than throwing money into an expensive college right away if they're not sure that's what they want? So that's my advice. I know I went all over the map and came back, but yeah.
No, that's good. Cool. So we're going to pivot pretty hard here. Who is the kindest person?
Yeah. I thought about this a little. The kindest person. The kindest person I would have to say is, that's not the most supportive person, right? You didn't ask me who the most supportive person is. If I had to say who the most supportive person is, I would definitely say my mother, but the kindest person is my spouse. And the reason I say my spouse, Roy Hahn, is the kindest person is because on the days when I'm working late, or the moments I'm really upset about how things are going, which in startups there's up and down every day, he is the kindest person to help me get through those moments, and so he's not the person I call for everything. I think that's my mother, but he is the kindest person because he has to deal with me every day. So I would say he's the kindest person because he's been kind regardless of how I've been. So thank you, Roy.
That's sweet. We might be okay. We're running low here on time.
Okay, so, no worries.
Yeah, Roy sounds awesome.
Yeah.
So, my last question is, what is a question you think that I should ask all of my guests?
Yeah, I saw that. Oh man, I don't know if I thought of an answer. Every guest. Oh, I know. Interviewing entrepreneurs, what is their biggest failure? I think what is their biggest failure to date? you know, and how did that make them better? Like, I think the biggest failure, I think you learn more from failure than you do from success. And as much as we fear both of those things, the biggest failure gives us the best learnings.
Awesome. So
I
let's
would
answer
say.
your question. What is your biggest failure? And what
Oh
did you-
man, my biggest failure so far was to not start on my startup sooner. I would say that that's my biggest regret, maybe not my failure. Oh, biggest failure is like going onto a pitch competition stage and thinking I got this and being totally not prepared for a question and feeling like attacked and didn't know how to respond and getting like a little defensive of the question. So just like I really had to learn humility in like the toughest way, you know. So yeah, I mean, it doesn't sound like a terrible failure, but that's probably the one that comes top to mind, just because it was so easy to just not go down that road.
Yeah.
You know, so just doesn't matter what other people think. Just play it cool.
Yeah.
Is what is probably what I'm learning. So.
Nice.
That's come to mind. I don't know if it's the biggest failure yet. That's pretty good, right? I haven't failed my startup yet.
Wow.
So, anyways.
It sounds. I think you have a really great idea here. So hopefully that does not happen for you. So, cool. So as we wrap up, how does the audience help you, and and then how do we get a hold of you?
Yeah. So you can get a hold of me with my email. I don't know if people will see the board, but Catalina, Catalina, at myloansense.com. How can you help me? Refer your employer to speak to me. If you have student loan debt and think you could be helped by what we're doing. Or if you're an engineer, designer, a lawyer even, or have skills in sales, or are passionate about our vision and want to propose something to help us realize our vision, please contact me. Or if you have connections that you think are relevant to us, please let me know. And that's my call for help. Or if you think you want to start up a business and you want someone to have really hard conversations about what to do. Like, I love that, giving back to my fellow entrepreneurs. So let me know. I'm at Catalina at myloansense.com.
Beautiful.
So, thank you.
And we'll have that in the show notes, so people you can definitely check that out. So I want to thank you for being on the Startup 360 podcast. For those watching, please subscribe to the channel on YouTube. Please share with your friends. Please like the video. And please visit myloansense.com. Get in touch with Catalina. She's doing great things. Really excited for her. And we will definitely see you next